The E-mini had a dramatic reversal yesterday on the daily chart. It went below an inside day, an IOI, and it triggered the sell, but the sell signal bar was not good, a doji bar. It reduced the chances that this would be the start of a big swing down. And on the weekly chart, it traded above last week's high earlier this week and then below last week's low. And because of a tight bull channel with a lot of bull bars, last week is not a very good sell signal bar. It's possible that we get back above last week's high by the end of the week. It'll be good for the bears if they can close the week at or below last week's low, and that would increase the chances that we've begun a pullback to the weekly moving average and the bottom of the channel. This is, we had a breakout below the wedge, and now we're getting a breakout above the wedge and above the 60-minute moving average and that measured move target on the daily chart over here. I think it's a really important target. We have a major higher low, we have a major top, we broke above it, we tested just a little bit above it and reversed up violently. So two major prices creates a third major price, and that's where we are right now. We're right at that price. And we tried to break above it, failed, broke above it, reversed down, and we're right back at it. So the market's deciding what to do. And that price is a measured move target on the weekly chart. We have a breakout, a pullback, and a rally. So a major low, a major high creates a major target, and we got very close to that target. Back to the daily chart. Because yesterday was big down, big up, it creates big confusion. The bears are clearly disappointed by the size of that rally, and the bulls are disappointed that weekly and daily sell signals triggered. And we have a cluster of magnets, support and resistance, right around where we are. The 60-minute moving average, the daily chart, and then Tuesday's low for the IOI. So, and also we're opening within yesterday's range, and yesterday's a very big day. That increases the chances that today will be an inside day. Furthermore, you can look at the daily chart over here. It's a reversal day. We closed far above the low, but it had a bare body. So it's basically a big doji, and it followed a doji here. It followed a 2-bar reversal here, which is like a 2-day doji, and it's in a 3-week trading range. And therefore, it's not a strong buy signal. If we trade above yesterday's high today, we're very close to yesterday's high, it's not a strong buy. And it increases the chances that there'll be sellers not far above yesterday's high. So just like we triggered a sell by going below Tuesday's low, and it was a bad sell, and we triggered a sell by going below last week's low, and it was a bad sell. If we get above yesterday's high, it might be a bad buy. There might be sellers above. We finished yesterday always in long. We're breaking above resistance, the daily moving average, the daily measured move target and the 60-minute moving average. And we're testing again Tuesday's low, which was Tuesday was the sell signal. Can the bulls reverse up strongly or continue up strongly from here, or will they fail? Most likely they're going to fail. So as strong as this is, the bulls need to continue the strength. In 60-minute chart, you can see something here. Strong bull trend, but a lower high. And the lower high led to a low below a major higher low. And therefore, this is the early stages of a bear trend. So for the bears, they're hoping for a head and shoulders top. So left shoulder, head, and they're hoping this bounce results in a lower high and then a break below the neckline and a measured move down. What are the chances of that? Well, even if we get below the neckline, below this low, there's still only a 40% chance of a measured move down. While the odds are high, 60% or so, that we have to test down at some point in the next few months, the odds of any one of these reversal attempts being the start of that swing down are small. But one of them will be successful. We're also testing the bottom of a channel. We broke strongly below the channel, and now we're checking back to the trend line. Bulls want a double bottom bull flag, break above the neckline, and then a measured move up. And the bears want a lower high, a break below, and a measured move down. As you can tell, despite yesterday's very strong reversal, I am not very bullish. The bulls need to get above Tuesday's high, which is the lower high on the 60-minute chart. Even though we reversed up strongly yesterday, we still have a lower high, and therefore the 60-minute chart is in a bear trend. It's also in a trading range, right? And it's also in a bull trend. That is very common for the market to have all three going on. For example, if we continue to sell off and you look at the chart and ask yourself, where did the bear trend begin? You say, oh, it began right here. If we continue up and you ask yourself where the bull trend began, you say, oh, it began right here. So you would say that all of this is part of the bull trend. And if we go down, you'll say that this is all part of the bear trend. So right now we are in a bear trend. We are in a bull trend, and we are in a trading range. So good looking bull bar. We went above the high of the bar, but not a lot of traders interested in buying because of the reversal. Reversals, when you read about them on the internet, you always think reversal means trend reversal, bear trend to bull trend, and that bull trend is going to go a long way. That's not true. Most of the time when you get a reversal from a bear trend, it's from a bear trend to a trading range. And the rally is very strong. And on a smaller time frame chart, like a 5-minute chart, it is a bull trend. But that does not mean the bull trend is going to go a long way. Usually what happens after a reversal is the market sold off strongly, the market rallied strongly, nobody is certain of anything, and the result usually means a trading range. Usually it leads to a trading range. Now, the market's looking for the top of the range. This is a strong enough breakout above a wedge so that we'll probably need at least a micro double top. So the first reversal down probably will not get very far, so there are probably buyers below. Bottom of the range, well, probably down here. So big down, big up, big confusion, trading range, might be here, might be here. If we fall below this low, measured move down takes us there. We triggered a sell signal on the weekly chart and then went back above last week's low. A lot of times the market is simply pulling back from the breakout, and then the breakout resumes. It breaks out a second time. However, this reversal up is so strong that I think that is less likely. So I think it's less likely that we're going to go straight down below last week's low and then begin a big swing down. More likely the market's confused and it's going to go sideways more days. So what do you do? Yesterday we had a bull bar and then a bear bar and a huge bear trend. Today we have a bull bar and it looks like a bear bar. Is it going to be another big bear trend? Probably not. Context is different. Yesterday it was in a market that was already falling. Today it's in a market that's rising, and therefore there are probably buyers below. I don't know where they come in, usually around the moving average. So probably not a lot of bears willing to sell below 2, even though maybe 25% chance it's going to be the high of the day. So if it trades below 2, 25% chance we've seen the high of the day. That means 75% chance it's not the high of the day. If we start to get a series of bear bars, then the probability goes up. But right now, the odds are there are buyers not far below, and that the bears will need at least a micro double top. What about buying the too low? Arguing it's a test of the 60-minute moving average. The bear bar is too good, so I would not buy the too low. So right now, best choice, flat, a bad sell, and a bad buy. Bulls trying to get above yesterday's high. As I said, yesterday is a reversal day on the daily chart, and therefore a buy signal, but it has a bear body, and it's in a 3-week trading range. That makes it a weak buy signal, and therefore the market, even if it gets above yesterday's high, probably will not be a strong bull trend day. It looks really good here. If you just look at this, everything looks really good. But we have a bull bar on 1, bad follow through on 2. We have a bull outside up bar on 3. Let's see what happens on 4. Are we going to get bull bear, bull bear, bull bear? If we do, that's probably going to lead to a bear leg, right? If you have bad follow through after every breakout, usually the leg will lead to a reversal. Yesterday, consecutive sell climaxes. You keep getting bear breakouts with bad follow through, usually means the bulls are reasonably strong and that the trend is not going to last forever. You're either going to enter a trading range or get a reversal. Now, if we get a bear bar here on 3 and it's as big as 2, it would be a reasonable sell despite how strongly up this is. Right, because remember I said the first reversal down is not likely to be successful when the rally is as strong as this, and that the bears would need a micro double top. If 4 is a decent size bear bar, that would be a micro double top. We're so close to yesterday's high that we probably have to go above it to see if, in fact, there are a lot of bulls eager to buy above it. We finished yesterday always in long, and we're still always in long. Is it big enough to sell? If it's only 2 or 3 ticks like this, even though it's a second entry for the failed breakout above the 60-minute moving average, I think most traders are not going to take that sell. This rally is so strong that the odds are the first reversal down will be minor, a bear leg in a trading range. And that is true even if it comes all the way down here. So the odds are, yes, this is a sell signal, but the odds are that the best the bears get is a bear leg in a trading range. I'm talking about the deep pullback because sometimes when you get a strong rally at the end of yesterday and some follow through today, you do get a very deep pullback. We have support here at the breakout points. Let me find examples of this, a strong rally, deep pullback, but it became a bear leg in a trading range. Strong rally, deep pullback, became a trading range instead of a bear trend. Smaller version, strong rally, deep pullback. Strong rally, deep pullback, did not get below the bottom of the bull trend, and the market went sideways. And that's true today as well. So even if we do get a sell-off, even if the sell-off is very deep, right, compared to the height of the rally, it's still probably only going to be a trading range. Once it's in a trading range, then the bears can try to get a lower high major trend reversal. But the downside risk over the next hour or two is small. It's on a sell, and this is a legitimate sell, second failed breakout of something, right? and 60-minute moving average. However, we have that magnet of yesterday's high. Because yesterday was a big range day, there's a higher chance that today will be a trading range day, an inside day. In other words, test yesterday's high, which it's doing right now, but not get above yesterday's high, and then just sell off all day. Even if we do sell off, the odds are the first leg down will be a leg in a trading range, and that will subsequently get a rally. Right now, we may get one more push up because we still have room to yesterday's high, and this is so strongly up, we might get a third push up into a parabolic wedge. It's reasonable to be short here for a swing, but I think it's slightly more likely that there are buyers below 4 and that will go a little bit higher, but not much higher. Probably the best the bulls can get is a rally for an hour or so before we get a conversion into a trading range, a leg down, swing down. And the bears, this is up so strongly, the best they can get is a bear leg in what will become a trading range. And, we may test below this high, but, it's going to be hard to get below the 60-minute moving average. So confusing picture. You can see bull, bear, bull, bear. That is more common if the rally is going to evolve into a trading range than if it's going to continue up. Bulls who bought above 2 have it's only a 4-tick trap, right? So the bulls who bought above 2 have a problem. The bulls who bought above 1 have a 5-tick trap. And so as strong as this is, and with a good buy signal bar on 1, and then outside up on 2, the bulls did not make money. So there's something wrong here. Market's deciding, can it get above yesterday's high, a buy signal bar? And if it does, will the rally be strong? That's what we're testing. And if traders conclude that either it's not going to get above yesterday's high, or if it gets above yesterday's high and it's a terrible buy setup, then we begin to swing down. So right now, I think we're going to get a swing down, but the market is deciding if it has to go above yesterday's high first. Three consecutive bear bars, still always in long, and the market is still deciding, is this the high of the day, or will the bulls be able to get above the high of yesterday? Remember, the blue line is Tuesday's low, and it's a sell signal, IOI, and we tested back above the sell signal bar here, and we're reversing down again. And the bears are hoping that this is just a second sell, going back above Tuesday's low and then reversing down below again. Now, where will the bottom of the trading range be? At the 60-minute moving average, at the 5-minute moving average, at these breakout points. I suspect that because the trading range is likely, we're going to have to fall below the breakout point down here. Are we always in short? Well, it's hard to say that. We probably are, but it's still probably a bear leg in what will end up as a trading range. Testing the bottom of the biclimax low, bar 3 low, testing the 60-minute moving average, but trading range likely, so we may test lower. I think we'll probably test lower. What about limit order bulls? Will they buy the 3 low the moving average. I think we're always in short, even though I think this is ultimately going to be a bear leg in a trading range. But because of that, I would not be buying. Four-point bears took profits. We're at support, but strong enough down so that probably will form the bulls will need at least a micro double bottom. So not a particularly good buy yet, and a lot of the bears are taking profits here. Low of the day, 60-minute moving average, daily moving average, yesterday's close, and then sell climax at 8 plus the 4-point bears made money. Right now, 50% chance we've seen the high of the day. Maybe 60% chance. The goal of the bulls early on was to get above yesterday's high, hoping that it would be a buy signal bar and it would lead to a big rally. But big down, big up, big confusion, trading range more likely. For the bulls, you can argue double bottom 1-9, but strong enough sell-off, most bulls will wait for a second entry buy. %50 pullback here, right at the 72 high, and that's probably why the high of the day is exactly where it is. It's a measured move up from the height of, double bottom neckline, measured move up, and they put it exactly there to be a measured move, and so that if we get a reversal down, a 50% pullback would correspond to other support. Can you start buying yet? We got 6 consecutive bear bars. While it's possible it's the low of the day, double bottom 1, opening reversal up from the moving average, 6 consecutive bear bars, 5 of them closing near their lows. A lot of the bulls will want a micro double bottom. So in other words, I would not buy yet. Bulls hoping for another abrupt reversal down. 4 bear bars still went up. 4 bear bars, 3 very big, still went up. Now we have 5 bear bars, and the bulls are hoping that again will reverse up. But the odds are against it. We're in the buy zone, both moving averages, the daily measured move target, the 72 high, 50% pullback, but better to wait for a second entry buy. And a lot of the bears, looks like they took profits at 4 points. We're hesitating 4 points below 4 and at support. But because the bulls need a micro double bottom, bears will sell above the high of the prior bar, above the 9 high, above the 10 high, expecting that the bulls need a micro double bottom, and therefore the first reversal up will probably fail. Twitter, I've always wondered why it's not going higher. Here we're up 13%. The reason I say that is I don't use Twitter, but everyone in the world uses Twitter, and therefore it has value. So I think we're putting in a base. I'm always amused by the big moves that you often see in biotech. And here's Celgene, from 145 to, lost 30% of its value over the past month. And this is not a small company. It's a lot smaller now, but it's, still, it was a $140 billion company here, losing a third of its value in a month. It's just really incredible, the big moves that biotech can have. All right, so 50% pullback, testing the 72 high. So this is the buy zone. But it's down too strongly, and a lot of the bulls will wait for a second entry buy, micro double bottom. I said that we can get a really deep pullback after this rally, and probably we'll get a second leg down. So even if we rally up here, it'll probably lead to a second leg down. So we're always in short. Right now, 70% chance 4 will remain the high of the day. And by the close of bar 7, normally about 50% chance you've seen either the high or low of the day, but the selling is strong enough, so it's probably closer to 60 or 70% chance, and therefore traders will sell rallies. How high up will it go before the bears come in? Well, you can see we sold off 50% and the bulls are coming in. So if we go up about 50%, the bears will probably come in as well. Can this be an opening reversal and the low of the day? Sometimes you'll get a series of bear bars, and despite that, the market goes straight up and forms an early low of the day. More likely, this is not going to be the low of the day without some kind of a double bottom, and therefore probably sellers above. If 11 closes on its high, a lot of bears will not sell the 11 high. They'll look to sell higher. This is the final. Well, we got one more bar. This is for the end of the hour. And the bulls want to get back to the open of the day to have the 60-minute bar have a bull body. And it's possible that we can do that, but it might be too much. So for the bulls, can you buy that? Double bottom with 1, pull back to the moving average, 50% pullback. I would not take the buy. 7 consecutive bear bars and trading range day likely coming into the day. If it rallies 50%, is that enough room for a scalp if you take the buy? Okay, there's a 50% pullback, barely enough room for a scalp for the bulls. Better to be looking to sell the rally. What happens if we get 3 consecutive bull bars, 4 consecutive bull bars? Well, then the bulls could make it back to always in long. Right now, at this instant, more likely we're going to get a lower high. The always in bears, it's reasonable to get out above 11, but we're still always in short, and therefore they have to sell again below a bear bar. But because the context is good for the bulls, 50% pullback, testing the breakout point, testing the moving average, a lot of the bears will want a second entry short. Also, because this is a 50% pullback in a strong rally, a lot of bears don't want to sell down here at all. Sell zone somewhere up in the middle of the bear leg. If you look at this, I'm sure you have a sense of confusion. We have a strong rally, but a very strong reversal. That should not have happened given the strong rally, and therefore the picture is confusing. And when that's the case, usually bulls sell as it goes up, betting it's not going to go up too far. Bears buy as it's going down, betting it's not going to get down too far. And the result is a trading range. So we're probably forming an early trading range. On the open, whenever there's a strong move one way or the other, here we get a strong move down, and then you get a reversal bar. The trend traders usually don't like to fade it. So here we have a strong sell-off and a good bull bar. I typically do not sell the 11 high. And here we have a strong reversal up, but a bear bar, especially a second entry short, I'm not going to be buying the 4 low. Too often, especially in the first hour, a single bar like that can lead to a reversal, and I don't want to be selling too low, and I don't want to be buying too high. I usually sell this. I usually do not buy that. Here, strong enough sell-off, I think we're going to get a lower high. Bar 12, the close of the first hour, and bear body, and 3 consecutive doji bars. So 60-minute chart looks like it's evolving into a trading range. 5-minute chart, it's not so obvious, but it's probably true. Big up, big down, big confusion, probably trading range. For the bears, a low one short, below 12, but consecutive bull bars at the moving average. I think a lot of bears will not take that short. They'd like to sell higher, and maybe after a couple small legs up. 3 consecutive bull bars, but shrinking bodies, and probably a lower high. And today's probably going to have a lot of trading range trading. Bulls trying to do this. Strong sell-off, probably lower high, and then we get a breakout. Is it still more likely that we'll get the lower high? It is, but if we get a couple bull bars here, 14, 15, then it's back to 50-50. Strong sell-off, got a new high. Strong sell-off, got a new high. Strong sell-off. I still think the odds are against the new high, but we'll see. A good example of why I don't sell that 11 high, even with all of those bear bars. Early in the day, too often, you get a strong sell-off and a bull bar, and you get a swing up. Too often you get a good bull breakout and bull rally and a bear bar, and you get a swing down. In the sell zone, but the reversal up is strong enough, so a lot of traders are not selling yet. They're waiting. Can you buy it? Are we always in long? I don't know. I think the bulls have to get above 4 high. I said that the 4 high was a minor reversal, and that the best the bears would get was a leg down in what could be a trading range. Once they get a trading range, then they can get a major reversal. And therefore, if we get a second high over the next few bars, the bears would have a possible major trend reversal set up. This bar is getting very big, which is good for the bulls. Can you buy on a stop above 4? Arguing breakout mode. After the first bar, we got a new high that reversed down. We have a new low that reversed up. This is a breakout mode pattern. So theoretically, there are bulls who will buy on a stop above 4, and bears who will sell on a stop below 11. I usually do not do that. Sometimes I'll do it if the context is really good. I'd rather wait to see the breakout above 4 and then buy closes or buy a pullback than to buy on a stop just above 4. Bears want a lower high major trend reversal. And therefore, theoretically, you can sell here and put a stop above 4 and take a chance that the rally stalls, we go sideways, and then trend down. I would not. Too much momentum on 14. I would wait to see what we get. Can you sell? Second leg trap, small second leg trap. we have a small bear flag here, and we got a bull breakout. I think 14 is enough to make a lot of traders not sell below 15, even though it's a lower high major trend reversal. Are we always in long? Unless we break above the 4 high, I still think the odds are we're going to get a pullback, but 14 is enough, I think, to confuse things. We're trying to get above yesterday's high to trigger the buy signal on the daily chart, and yesterday's high is that red line. I think of this as a opening reversal up from the moving average and a double bottom, even though this low is far below that low. For the bears, lower high major trend reversal, but 4 bull bars, and bar 14 is a big bull bar, and the sell signal bar 15 is a 1-tick bear doji, so probably buyers below. Bears trying to get a double top. Strong rally, deep pullback to below the low. It's still a double bottom with this low. Some computers see it as a double bottom with that low. And the bull's got a reversal. And if we do get a new high, this is probably what will happen. Too much confusion. Big up, big down, big up, big confusion, and probably mostly sideways. We did go higher, but not a strong rally. So I think if we do go higher, this is probably what it will look like. This is also an opening reversal setup. We have a new low, a new high, and then another new low, and we broke to the upside, and you can see not a strong breakout. Traders bought the pullback, they bought the pullback. Not many traders bought the breakout. I think we're probably always in long, but I'm hesitant to buy until after I see the breakout above 4, and then probably the pullback. I think the day is similar to this. Pretty common pattern. This is another version of the same thing. Strong sell-off to a new low, and got the breakout, but mostly a trading range after the breakout. And I suspect that that's the case today. So, continuation of a rally from yesterday, rally on the open, deep pullback, double bottom, and then a breakout, but that was it for the day. For the bears, lower high, major trend reversal, but too much momentum up and too much momentum up here, so most bears are not going to sell below 16. Probably buyers below. So we're probably doing this, pull back for a few bars, and then try again. Stalling below the high. Stalling below the high. We tried to get back above Tuesday's low here and failed, and we're trying to get back above it here. Tuesday was a bear IOI and therefore a sell signal, and we got a big sell-off yesterday from it. However, we're coming all the way back up to it, and we're trying twice to get above it. So I think we're going to get above it, and I think we'll probably get above yesterday's high, which is not much higher. However, I think that all the confusion will probably result in a lot of tight trading range trading for the remainder of the day. Buyers probably below bars here. We're probably going to get the breakout, whether or not we pull back first. Bulls are buying because they're confident that we're going to get the breakout, and that at this point we've probably seen the low of the day. I said earlier 60 to 70% chance we'd seen the high of the day. Now it's 60 to 70% chance we've seen the low of the day. This is bar 18, and by the close of bar 18 there's a 90% chance we've seen either the high or low of the day. Bears will sell a reversal down, betting that we're putting in the high. But right now, I don't see a reasonable sell setup, so I would not take the sell. I think more likely we're going to go to a new high, and that 11 is going to remain the low of the day. If we go sideways here for a few bars, then I might take a short. And if we go one tick above 4 and reverse down, then I might look for a short. But right now I think it's more likely that we're going to go to a new high, but then stay mostly sideways for several hours. Today was likely to be a trading range day at the start of the day, and nothing has changed. We went up, we went down, we went up, we went down, we're going up again. 5 ticks above 14 close. That means we're stalling here. That means a lot of the by the close bulls 14 who bought the breakout are scalping at least part off at one point. Bears want the double top major trend reversal, but they needed to go sideways for a few bars. Otherwise, traders will buy the reversal down below bars, betting that it's more likely that we're going to a new high than it is that we're going to a new low. So right now, probably buyers below 18. Tried to get above the high, could not. Tried again, could not, and reversed down. Okay, so you can see we got the breakout, and now we're trying to break above yesterday's high, because yesterday's it's a reversal day. It's a bear reversal. It's a reversal day with a bear body, so not strong. 90% chance 11 will remain the low of the day, and that means today will either be a bull trend day or a trading range day. Chances are it's going to have a lot of trading range trading. We got right up to yesterday's high. You can see there are sellers there. It's 5 ticks above the 4 high, so we got some bull scalpers trying to scalp off for 1 point. And the bears are hoping it's a failed breakout of the 18-bar range and that it's the high of the day. But right now the odds are we've seen the low of the day. Bar 18 breakout and became the high of the day. So this is what the bears are hoping, that we're getting the breakout of the 18-bar range, and it's going to fail. Bar 18, here's the breakout of the 18-bar range. It failed. 18-bar range, we broke to a new high. It failed. 18 bar range, broke to a new high, reversed down, tight channel, so probably a minor reversal, broke above it again a second time and reversed down. Similar to today, opening reversal up, broke to a new high above the 18 bar range, and it ended up as the high of the day. But it could not go straight down. It had to go sideways for a lot of bars first. So this is probably the best that the bears can hope to get right now. So double bottom, opening reversal, new high. Double bottom, opening reversal up from the moving average, new high. But tight channel, first reversal down, minor, and then tight trading range. Fairly tight channel, first reversal down, probably minor. Confusing, so trading range likely. Strong reversal up, and we break to the new high, several ticks above the target, and then sell off sharply. That is confusing. So this is probably what we're going to get. I don't know if we're going to go sideways for 3 hours like this, but we're probably going sideways for at least several bars. What do you do here? I think a lot of traders are flat right now. They were long, and now they're flat, waiting to see what we get. Are we going to go sideways, or are we going to go here sideways? Here sideways above the 18 bar range and continued up a little bit. But this is stronger than what we have today. So I think we're probably going to do something like this over the next hour. The bears want a higher high major trend reversal, but 19 is not a good sell signal bar. Probable tight trading range here. So buyers below things, below 19, and probably sellers above things. Still always in long, but this is probably what we're going to do. All the examples I'm showing you of that the market's spending a lot of time going sideways. This is a much stronger setup and stronger breakout, and we got good follow through. Here we got a huge breakout and a huge bull trend day. Not likely today. One of the problems that the 18 bar range breakout has is it's a day that's a lot of times it's already had 2 reversals, so and that's trading range behavior. And I should say that's more of the breakout mode type day. It's already had 2 reversals, and today is like that. We've already had 2 reversals, and that increases the chances that today will be more of a trading range day. For the bulls, a breakout pullback buy, but probably a limit order market. You can see they bought the 19 low, but traders are probably switching into limit orders here. They sold the 4 high instead of buying the 4 high. They sold 1 tick below yesterday's high instead of buying the breakout. That's why I was saying that I typically do not buy on a stop above the 18 bar range unless there's a lot of momentum, and this is not enough. Oh, look at the volume. Well, that's interesting. 44,000 contracts on that breakout. And, obviously there are buyers and sellers, but it's interesting that it attracted so much attention. Breakout to a new high, could not get above yesterday's high. Well, that might be it for the next couple of hours. We may get into a tight, boring trading range here. Like this, like that, this, this. That's a better sell for the swing bears, lower high major trend reversal, but 4-bar tight trading range, not a strong sell. Still tight trading range more likely. The market's deciding higher high major trend reversal, second entry sell, or a tight trading range. Just the size of this bar reduces the chances of the tight trading range. The bears need a strong bear bar, in other words, a bar closing near its low, big body, and they need a follow-through bar. If this bar closes somewhere in its middle, that increases the chances that we're going to go sideways. If it closes on its low, especially if the next bar is also a decent bear bar, it increases the chances that we're going to break below the 11 low and have a swing down to the 77 low. Like this, breakout above the 18-bar range and then a reversal down. Here it ended up as a bear trend, but it took a few hours before the bear trend began, and when we broke below the low, we reversed up pretty sharply. Break above the 18-bar range, reverse down, got one more leg up. Today we're not up as strongly as this, so I think we're not going to get the one more leg up. Even with the one more leg up here, it did not again break above that high. Big bear bar went sideways. Today's bear bar is bigger. You can see there's a fight going on. We got the 5-minute and 60-minute moving averages near one another. 60-minute moving average flat. We're at support, the daily measured move target, and we got a conspicuous tail on the bottom of 22 that weakens the bear case. So are we always in short yet? I think the bears need one more bar. Whenever the bears need one more bar, you have some bulls buying the close, betting that the bears will not get their one more bar. I would not do that. The bears have a pretty good setup going on here, so I would allow one more bar to see what we get. Right, we knew from the open that today would have a lot of trading range price action, and it continues to do it. Good bull bar, good bear bar, good bull bar, big sell-off, big reversal up to a new high, another reversal down. At a minimum, the bears would like to get a bear body. If it's going to become a bear trend, they'd like to have a very big bear body closing below the 22 low. Does not look likely. Looks like continued trading range. Bulls buying above 23. I would not, but they want 23 to look like 11 closing on its high. Terrible follow through, possible reversal. For the bulls, it's a pullback from the breakout to a new high of the day, but it's just too big a bear bar. So a lot of the bulls will wait for a micro level bottom, and for the bears, they wanted 22 to close on its low, and they wanted 23 to be a bear bar, preferably closing below the 22 low, and does not look like they're getting either. If in the final seconds 23 does close below the 22 low, it'll be always in short, and traders will sell closes. tight trading range at bar 21, reasonable for bulls to buy the 20 low, and if we get one tick above the 20 low, then limit order bulls made money, and that means that we're still probably in a trading range. If the bears can keep 24 from going above the 20 low, then they might get a gap and a swing down. Most likely we're going to stay sideways, which means most likely we're going to get above that 20 low, and the bulls will make money. Best choice right here, flat. And I would not do anything with the 23 high. It's like this. I don't want to be selling above bull bars after sell-offs in a day that's probably a trading range day, because the risk of reversals is too high, and I don't want to be selling at the low when the market's about to reverse up, and I don't want to be buying at the high when it might be reversing down. So I don't want to be buying up here, I don't want to be selling down here, and I don't want to be selling here either until it clearly becomes bearish, which it's not. This is what the bears want. Bulls hoping on a bull channel, deep pullback, but higher low, higher low, higher high. Sometimes you get a mini new higher low day where you get repeated new highs and lows, but it's rare to get more than 4. So new high of the day, new low of the day, new high of the day, new low of the day. So it's 4. And if you try to get a 5th reversal, it usually fails. New low of the day, new high of the day, new low of the day, new high of the day. And usually that's the most you get, 4 reversals. New low of the day, below the low of the first bar, new high, new low, new high. Unlikely to go back down here. Also, after all those reversals, you usually run out of time to get a 5th new extreme. New low, below the low bar 1, new high, new low, new high. Fell below the low bar 1, so this is kind of similar to today. New high, new low, new high, and the bulls got a deep pullback and some trend resumption up. Expanding triangle, new low, new high, new low, new high. Could not get the 5th new extreme. For the bears, a pullback from the 22 sell-off, but consecutive bull bars, middle of a trading range day. Not a very good sell below 24. Probably buyers below 24. And for the bulls, big enough sell-off 22. A lot of the bulls want the market to go below 24 and trap bears, and then the bulls will try to get a micro double bottom for a second entry buy. I wanted to buy a pullback from that breakout, but I did not want to buy a big pullback like 22, so right now I'm flat. Lower high, but 3 bull bars and the middle of a tight trading range day. So not a good buy, not a good sell. Still always in long, apex of a triangle. But as I said, I thought today would spend a lot of time in a trading range, and the range might be very tight. You can look at the daily chart and you can see that so far today is a doji bar. We traded down, we traded up, and we're right near the open of the day. And the open of the day probably will remain a magnet all day, and we may end up closing right around the open. a lot of lines here. So a lot of support, resistance, all magnets, and it increases the chances that we'll stay in this general area all day. Still forming higher lows and higher highs, and still always in long, but probably not going all that high. The bulls are trying to get above yesterday's high to see what's there. It's a buy signal bar, but it's a weak one. It has a bare body, and it's also in a 3-week trading range. There are probably sellers above, but the market still wants to go up there and find out. You can call it a head and shoulders top, left shoulder, right shoulder, left shoulder, head, right shoulder. Also, whenever there is a higher high major trend reversal, if the market's going to trend down, there's usually a lower high major trend reversal. This is a two-legged rally to a lower high major trend reversal. And just like selling below 21 was a reasonable swing sell, this is also a reasonable swing sell. However, the bars are becoming very small and we're getting in a very tight range. That means the probability for the bears is probably lower than 40% that this is the start of a swing down. More likely we're going to continue in a pretty tight range. The bulls are trying hard to get above yesterday's high to trigger the buy on the daily chart. However, even if we do get up there probably will be sellers above. I've been saying since the open that today would probably be a trading range day, and the market has not done anything to this point to change that. So yes, lower high major trend reversal, head and shoulders top, but really small bars, no energy over the past 10 bars, so unlikely to go down very far. It's similar to 4 and 21, right? Reversals, major reversals never look convincing, but they still have a reasonable chance of going a long way. Bears need at least a pair of consecutive bars for traders to believe that the reversal is going to be minor. Remember I told you about when you have a 18-bar breakout that reverses, sometimes you get a pullback before you continue down to the low of the day. So this kind of thing, failed breakout above the 18-bar high, strong sell-off but big reversal, and second half of the day sold off. I don't know that we're going to get that. Chances are we will not, but the context is good for the bears. Most likely it'll remain a trading range day. We sold off, they bought it. We sold off, they bought it. We sold off. Will they keep buying it? I don't know. We'll find out. Whenever I do take these sells and the market's in a trading range, I take half off at 2 points because the market's more likely to remain in a trading range than convert into a trend. Everyone sees that we reversed down, we went up, reversed down strongly, up, down strongly. So a lot of traders are hesitant. Right now I think it's more likely than not we'll get at least a small second leg down, and we'll get down near the low of the day, and maybe below the low of the day. Important bar, follow through bar. Will the bears get a bear close? Will the bar close on its low? If it closes on its low, then that increases the chances that we'll actually get a swing down. If it has just a small bare body, then the odds are we'll have at least a small second leg down, but not necessarily a swing down. If it has a 1-tick bull body, probably sellers above. If it has a 3 or 4 tick bull body closing on its high, then it's similar to 11 and 23, and it increases the chances that the trading range will continue. Enough of a surprise bar like 22, first reversal up probably minor, and it has to test back down to that 22 close again before the bulls can get a rally. And the same is true here. You can see it's just waiting for the final seconds to let us know, bear body, bull body. You can see as soon as it had the bear body, what happened. Trader sold the close. You see how the 39 open is below the 38 close? That tells you that a lot of traders are just waiting to see if 38 had a bear body, and if it did, they were going to hit the button, sell the market. Pretty good tail, 38. We still might bounce a little bit above 38, but I think we're always in short. We have a bear breakout, good context, and a bear follow-through bar. For the bulls, a lower double bottom. You can call it 2 legs down, 1 pullback 2 in a trading range day. Trading range days often have 2-legged moves, but with the 3 bear bars, I think we're always in short, and there probably are sellers above. If we start to get 3 bull bars, then we'll probably get a second leg up. Swing bears, it's a trading range, and while I think the odds are we're going to get a second leg sideways to down, I would get out of shorts above 40 and then look to sell again if we get a bear flag around the moving average, maybe a low 2 bear flag. The bears probably will need a low 2. This is a low 1 short. Low 1 shorts work reasonably well when there's a very strong bear trend. When you're at the bottom of a trading range like this, usually the bears need a low 2 sell signal. Like this. When the market's in a trading range and you're trying to get a bear breakout, usually you have to get a low 2, not just a low 1. So low 1, low 2. Let me see if I can enlarge this. Oh, I don't know if I have enough room. Let me see what happens. I gotta play with this a little bit, make sure I have everything right. Let me try the lower of the two highs and see if that's the source of the measured move. Okay, at least that's easier to see. The bulls are hoping that we're getting a micro double bottom and a double bottom and a reversal back up. And bar 44 then becomes important. If it's a relatively small bar, then we'll probably get a low 2 sell signal below 44. On the other hand, if 44 is a pretty good sized bar, 5 or 6 ticks tall, then the bulls are probably getting a successful micro double bottom and double bottom at the bottom of a trading range. So bar 44 is an important bar. This is what I'm talking about. It's actually pretty fascinating right here. You could sell right here and risk maybe 3 ticks, arguing that if the bar got 3 ticks bigger, the low 2 is probably not going to happen, and the reversal up probably will. Alternatively, you wait to see if we get a sell signal bar, a bear reversal bar on 44. But the math is actually, I think, I always like these little mathematical things. They're fun to think about. Sometimes, in fact, in a situation like this, I do sell the market, or I sell with the limit order at the 43 high or at the moving average. I did not now because we have 4 bars without a bear body. In addition, the bears probably now need more than a 1-tick bear body, since they have been unable to get a bear body in the past 4 bars. They need to do something convincing here for traders to take that short. You saw in that example, the bear body is pretty good size. Let me see what happens if I expand this even more, if it's more clear. Maybe it is. Let me take a look at this. So that's the low 2. The bulls have a disappointing bar 44, but the bears do not have a bear body and 5 bars, and that will make a lot of traders not take that sell. So if it's not a good sell, not a good buy, usually better to wait. It's 6 bars without a bear body, and therefore probably back to always in long. I am flat at the moment. For the bulls, a breakout test and a possible gap for a measured move up. Everything is kind of in slow motion, but this is a breakout and this is a pullback and there's a gap 45 high, and market's always in long. For the bulls, 46 likely to get a second leg up, and 50 might be the second leg up, even though it did not get above 46. And for the bears, it's another lower high and a second entry short. But I still think it's probably always in long, and I did not take the short. And I'm not buying above the 50 high at the top of a trading range day. So right now, I'm trapped out. I'd like to sell higher, and I'd like to see a better reversal, and therefore I don't want to take the short. Bull flag, high 2 buy, but in the middle of a trading range with a doji buy signal bar, always in long, but I did not take it. This would be a higher probability sell than either of these two, but 10 bar very tight range in the middle of a trading range day, right at the open, which is a magnet for the rest of the day. So even though it's a better sell, the range is so small, it might be very difficult to make even a 1 point scalp. So better to wait when the range is this tight. Euro, I think is interesting. Triangle, big bear breakout. I've been writing about the weekly moving average in the euro, saying that we're so close to it that we have to get there before we can go much higher. And we're just about there right now. We probably are there. I don't have this updating every tick, but we're, at the minimum objective. We have never pulled back to test the top of this 2-year trading range. So, you can say this is the top, this is the top. Most of the tops are right around here, so this would be the next target. Despite a 20 gap bar buy setup. We might bounce here and find support, but, there's a pretty good magnet down here. On the monthly chart, we reversed down from a test of the top of the 10-year trading range. We went a little bit above this low and pulling back, but 6 big bull bars, probably a minor reversal for a few months, testing down here. A better looking 2-legged sell, but the market is in such a tight range that it's very difficult to make money doing anything, buying or selling. So I think even though we're, still always in long, we're at the top of a trading range day, and there's a big magnet at the open of the day. We might get a couple of points above it, a couple of points below it at some point before the end of the day, but we're probably closed right around the open. And today will be a second or a third consecutive doji day. Doji day here. Yesterday, as big as the sell-off and rally were, it's still a doji day. And today is another doji day. I'm going to get rid of this trend line. That's the sell, 2 legs up and a lower high, but a very tight range and very difficult to make a 1 point profit selling with the stop there. Still always in long. No one wants to buy up here. The bulls are hoping to get above Tuesday's low right here, and yesterday's high up here by the end of the day. But we're spending a lot of time around the open of the day. Today's an inside day. Probably will end up closing right around where we are, whether or not we go up a couple points or down a couple points. The odds of a big move late in the day when you have a small day are small. Sometimes you get a big move with a small day at the end of the day, but that's rare. The longer you stay a small day, the more likely it'll continue as a small day for the rest of the day. Small day, all day. Small day. This is actually pretty small. It's just a 4-point range. We got a little bit of a breakout here. Small range, less than 5 points. A little bit of a rare breakout, a little bit more, but stayed small. Small day. Little breakout at the end of the day, but not much. Same thing here. A little bit of a breakout, but not much. Here, if you have a small range for the first 3 hours, you have a better chance of a breakout. So if the breakout's occurring 9 or 9:30, you have a better chance of a big move. Here's a breakout around 10 o'clock. Now we're at 11:30, and the chance of a big breakout, again, another early one. The chance of a big breakout late in the day, usually the breakout's not going to be very big. You can see, even though the bears have reasonable sell setups, 58 and 61, we're right in a tight trading range at the open of the day, which is an obvious magnet, and it makes it very difficult for the bears to make even a single point selling with a stop. It's still on the sell, so always in long, always in short, probably short. I'm flat simply because the range is so tight. And we're right at the target that I've been talking about most of the day, open of the day. And today's probably going to close around the open of the day, and the day will end up as a doji day and probably an inside day. We probably will not get over the high of the day. Bears again getting a sell-off, 4th time today. 1, 2, 3, 4. Can we get much below the open? I don't know. We're getting lower highs. We're getting higher lows, but we're getting lower highs. And we get that double bottom with yesterday's, double top with yesterday's high. So the bears have a chance. Also, given how overbought the daily, weekly, and monthly charts are, I think we're going down, but I'm just not sure if we'll go up more first. We may go up a little bit more. I do not think we'll go up much more. A lot of times we've had tops and then one more top, top, one more top, top, one more top. And I think the same thing is playing out here. If it's going to close around the open, can you buy here? Arguing it's a weak sell-off. I would wait to see what we get. Chances are we're going to get a higher low. Even though we have that huge reversal yesterday, I still think we have consecutive tops on the daily chart, and we might have seen the high for the next couple of months. Obviously the bears have to do a lot more, but we had a reasonable top here, and then we have a second reasonable top here. Yes, we reversed up very strongly, but if we start to get a series of bear bars, traders will start to think that maybe we're going to pull back to the breakout point over here, which is where I think we're going. We may go a little bit higher first, but I think we have to get below this breakout point. This test was not enough. Only one tick below and a doji bar. Consecutive bear bars, but not very big. So not a lot of traders selling down here. Bulls are hoping it's still a bull flag. So bull reversal, and they're hoping this is a bull flag for another leg up. It probably will be, because the open of the day is, I think, going to be a magnet that will dominate the remainder of the day. For the bears, it's a low one short, and what they hope is a bear trend. And for the bulls, they want a micro double bottom, and for the market to stay around the open of the day. The bears really need a dramatic bar to make a statement. Anything less than a big sell-off at the end of the day is meaningless. The day still ends up as a small inside day, and that's probably how it will remain, a small inside day. So the odds are against a big sell-off. Bears are hoping for a breakout, but more likely there are buyers below, and that will have a hard time getting far from the open. Still a little early for sell to close. If this was a big bear trend day, you can start selling off, bar 60 and make it to the end of the day. I don't think of that so much sell to close as simply a continuation of a bear trend. Here, if we start to get a sell-off, I would think of it as a breakout, a sell to close. But I think the odds are against it. You can see there are some buyers 67 low betting against the breakout. If we do get to a new low of the day, probably buyers below. When a day stays small for most of the day like this, 5-6 hours, and it then gets a breakout, usually the breakout does not go very far. Here's another example, breakout in the final hour. Another example, breakout in the final hour. Breakout, end of the day. Breakout, end of the day. As I said, to get a big move, the breakout usually has to be earlier in the day. So if you have a small day and you get a breakout after 3 or 4 hours, you have a chance of getting a measured move up. Here, bear breakout, 3 hours into the day. Today is more like these days. Small day for 5 or 6 hours. Usually the breakout, if it comes, does not go far. Bulls would like to get a bull IOI, a bull inside bar. That would be a better buy. But with everything as small as it is, the math is difficult, because you're going for a 1-point scalp probably, and your risk is almost always going to be bigger than your reward. Magnet at the open of the day, fairly tight channel. So it's a breakout on a higher time frame chart, maybe a 15-minute chart. However, we're still at the bottom of a trading range day, and we're fairly close to the open of the day, which is a strong magnet. And unless this continues down for a few more bars, the odds are we're going to try to get closer to that open before the end of the day to make the day a more perfect doji day. The bears want the day to close on its low. They're trying to get a makeup day after allowing yesterday to reverse up so strongly. They want to quickly make the chart bearish. But, they need to do a lot to regain control. More likely, bull trend, trading range, bull flag, and we'll get trend resumption up, maybe a little tomorrow. Tomorrow will be interesting. It's a Friday, last day of the week, so weekly support and resistance are important. We went outside down. Sometimes when you go outside down, you then go back above the prior bar's high, and the bulls are trying to do that here. They got halfway there at the end of yesterday, and they'd like to complete the journey up to yesterday, up to the all-time high tomorrow. Is it likely to happen? No, it's more likely that we're going to stay fairly neutral and close around the middle of the week. So a little wedge bull flag, 3 reversals up, 1, 2, 3, a failed breakout below this low, a failed breakout below the double bottom, but still a higher low, and still could not get back below this breakout point. So even though it's a bear bar 71, if I were short, swinging a short, I would get out. And to buy tight channel and bear body, so not a very good buy, the most compelling reason to buy is the open of the day is a magnet, and we're close enough to it so that we're probably going to have to get back up in that area. The bulls might need a micro double bottom because you got 4 bear bars here and a very tight bear channel. Like up here, the bears needed, this was not good. They had to get a second top, and even that was not good, so they had to get another top. And we might need the same kind of process down here for the bulls to get back to the open. Bears want a double top 67, a break below the neckline to the new low of the day, and the bulls hope this breakout of the bear channel is strong enough so that if we try to reverse, there'll be buyers below, and we'll get a second leg back up to the open of the day, similar to this. So bear trend, bull breakout, pull back, second leg up, bear breakout, reversal up. The bears tried to resume down. We got a second leg up. Not a lot of traders willing to sell down here, even though it's a tight bear channel. It's still at the bottom of a trading range day, and we're near an important magnet. Plus, we got reversals up here and then again here. So reduces the chances of this going down. More likely, we're going to get back to the open. Again, testing the 72 breakout point. The bulls would like to get a bull bar for a buy signal back up to the open of the day. Without it, a lot of bulls will not buy. This is potentially a better buy, but it's really not all that good. Very quiet trading, fairly tight range, and the main reason to buy would be for a test back up to the open. Taking 6 ticks up, and can the bears sell up here above the 73 high, arguing limit order market, and we've been channeling down since 19. I would not, and I think most of the bulls who bought 74 will scalp out either here 1 point or around the open of the day. So this is probably that was probably the last scalp of the day. You can see we got near the open and reversed down, and that's why most of the bulls who bought above 74 scalped. Too much. It's unlikely to go much more than up to around the open, and there's always the risk of a quick reversal. So that was the end. I think bears are not, if you're a computer, you might sell below 77, but I would not. 4 consecutive bull bars. I would not do that short. Very quiet day. A couple swings early on. The first one was easy to take, below 4. Second one above 11 was less certain. The market is dealing with, I think, many very interesting things, especially on the higher time frame charts. I want to just show this. I think I showed this the other day. Okay, so here's the monthly chart going back to 1928, before the crash of 29. And every one of these yellow spikes is a time when there was a 3% correction. On the monthly chart, you're not going to notice a 3% correction. These corrections that you are seeing are 10, 20, 30%, some of them 50%, like here and here. This is a log scale chart, so the corrections don't look big, but they are big. Anyway, actually this is wrong. That's not the 3% correction there. That is the 3% correction there. I want to clarify this. I want to make it clear. The distance between consecutive yellow spikes is the number of days between the 3% corrections. You can see here we went a lot of time without a 3% correction. There probably were small ones in here that are just too small to see. But back here, this was the longest stretch, supposedly in the last 90 years, although it looks like there was a big stretch here. Well, this is obviously wrong because we have more than a 3% correction there. So, whatever's going on here is not right. But here we have a little spike up and down. So that was a 3% correction. And then we have another one here. And the distance between those two spikes is 241 days. Last Friday, the distance between this little spike here, hard to see, and this current spike was 241 days. And this week we went longer, and therefore this is the biggest stretch, certainly in a lot of years, since we've had without having a 3% correction. I don't know what's going on here and here. I'm going to have to look at this more. There may be small 3% corrections in here that are occurring fairly frequently. But anyway, the people who made this chart said that this was the biggest stretch without a 3% correction, 241 days. And this is, I see how the chart's doing. This is just the height of the days since the last 3% correction. So there are lots of 3% corrections here pretty frequently, whereas this is 241 days without a 3% correction. And this is 241 days without, as of last Friday, but now we've gone more days. So this is the longest stretch in history without a 3% correction. Anyway, so that is evidence that the daily chart is climactic. This is the longest stretch without a 3% correction in 90 years. And weekly chart, we've gone now 49 weeks without touching the moving average. That has never happened in the history of the E-mini, and therefore the weekly chart, in addition to the daily chart, is overbought as well. And then the monthly chart, we have 12 bars where every low is at or above the low of the prior bar. Well, 11 bars from here, but it's a 12-bar bull microchannel. And that has happened only once in the S&P futures or cash index in the past 50 years. And the longest stretch was 13 months, 1 month longer than this. So we're just about at historical levels on the weekly buy climax as well. Now, climaxes can always go further than what you think is reasonable. I did not think this one would go this many bars, but it's surpassing all prior buy climaxes. We've never been this climactic on the daily, weekly, and monthly chart. And it could go much further, but it's not likely because the charts are based upon human behavior, and the human behavior today is the same as it was 100 years ago. So mapping it out with charts is likely not to get much different from the most extreme it has ever been. We're at the most extreme that it has ever been. So it's unlikely to get more extreme. And therefore, we'll probably get at least a 3% correction. I think more likely a 5% correction. I would not be surprised if we had a 10 or 20% correction because this is so climactic. As I said, I think the target is this high. It might simply be this breakout point, but this one was not tested adequately for this much of a rally. Only a doji bar that barely dipped below it, and then a huge rally afterwards. This does not look like a strong enough support for this size rally, and the rally probably needs more support, like a double bottom, and therefore I think that we're going to have to correct back down to this high, the August 8 high, before the market gets much higher. We had a huge reversal up yesterday, and when the market reverses, what it's doing is ending a trend. So it ended a sell-off. That does not mean it begins a bull trend. It usually means it transitions into a trading range. This is strong enough up so that we're probably going at least a little bit higher. I don't know if we go a lot higher, maybe leg one, pull back leg two, maybe we go to a new all-time high. But I think we're probably not going a lot higher before we begin the correction. The weekly and monthly charts have never been this overbought, and to bet that they're going to get a lot more overbought, that this is going to go up a lot higher, I think is a very low probability bet. On the day, first bar of the day, a bull doji bar, possible low of the day. But I think that because yesterday had a reversal, today is probably going to be mostly a trading range day. Also, yesterday, it's a reversal bar on the daily chart, but it has a bare body, and therefore it's not a very good buy signal bar. We had a sell signal, an IOI here, and we could not get much above the bottom of that bar yesterday. We triggered the short, and today we went a little bit above Tuesday's low here, but we're still below it. The bulls are trying to erase what the bears did. The bears got a sell signal below the IOI. The bulls want to get back above Tuesday's high, which is this lower high on the 60-minute chart. 60-minute chart looks like we are going higher, a good enough reversal, and it looks like a bull flag, so it looks like we're going higher. And weekly chart, we went outside down, and sometimes when the market goes outside down, it finishes the week back above the prior week's high. So it's like outside down and then back up again. So you get an outside down bar and an outside up bar in the same week. Here, daily chart, above yesterday's high, below yesterday's low, so we're outside down. And then we went back above yesterday's high, so now it's outside up. So it went outside down and then it went outside up. Another example, went above yesterday's high, traded down, went below yesterday's low, traded up, and went back above yesterday's high. So it went outside down and then outside up. And that's what the weekly chart might be doing. We went outside down, and if we get back above last week's high, which is the all-time high, then the week would also be outside up. Look at this impressive buying at the end of the day, similar to yesterday, right? You can say, well, how can it sell off like that in 78 and then do this on bar 80? That's not fair. Well, it has nothing to do with fairness. It has to do with computers. And if you're fast, if I were not talking and if I were 20 years younger, I'm 100% certain I would have bought above 79. But that's not the facts. I am talking, and I'm not 45 years old anymore. So I did not take that buy. But anyway, to me it looks like we're going higher. It looks like a strong rally, bull flag, and we're trying to reverse up. We broke below the breakout point here, double bottomed here, and then we broke below it again here, and now we're reversing up strongly. Small expanding triangle, down, down, down. So right here, small expanding triangle. I think it's really more 2 legs down. 1, pull back, and then 2. And this looks like the end of the second leg down. Does not matter that the pullback this is the first leg down. Does not matter that the pullback went above the high of the first leg down. In trading ranges, the market often does that. So it's very common that the pullback goes to a new high, but it's still a pullback from this reversal down. The market transitions from bull trend to trading range, and during the trading range phase, a lot of times it goes above major highs and it goes below major lows like this. Just for stop entries today, Buying above 1, possible low of the day. I would not do it. I thought after yesterday's reversal, today was probably going to be a trading range day. So I would not buy above 1. I would not sell below 2. I think we're always in short, and that's not a strong enough sell signal. However, selling below 4, I thought made sense. It's a second reversal, failed breakout above everything, 60-minute moving average, yesterday's closing high, the daily measured move target. So I thought that was a reasonable short for a possible high of the day. And then when we get down to 11, the only thing I knew was it's time to get out of shorts. And as far as getting long, I don't know. I think, I said on the open, I thought that this rally was strong enough to get a second leg sideways to up, and that therefore the sell-off was probably part of a pullback, and that we're probably going to test higher. I thought with the 8 consecutive bear bars, or 7 consecutive bear bars, we might get a small second leg down, but we did not. In any case, I did not do anything with the 11 high. And then up here, I would not, I talked about the market trying to get above yesterday's high to trigger the buy on the daily chart. Yesterday was a reversal day, and therefore it's a buy signal bar. And you can see 19. It looked very bullish going up to 19, and then it just stalled. I said it's at bar 18, I said we have an 18 bar range. I'm not buying on a stop above 4 because it could reverse. I want to see a strong breakout, and then I'll buy. Otherwise, I'll look to sell. And we have a second entry sell below 21 for a higher high, major trend reversal, bull trend, good enough bear reversal, and now a higher high, possible high of the day. And then we got terrible follow through on 23. Then we got 3 bull bars, 25, and it makes me think the bear reversal is failing. 26, a lower high, maybe a triangle, but the 3 bull bars, probably buyers below. And then 30, a double bottom with 22, double bottom with 23. It looks like we're going a little higher, but it does not look strongly bullish. We still might get a second leg down. We have a higher high, major trend reversal. Usually leads to an attempt at a lower high, which we got here. 2 legs up, 1 pullback 2, and a micro double top over here. Up on 34, down on 35, up on 36. So a reasonable swing short. Good bar, 37. Bear follow through 38, so we're going a little bit lower. But we're right at the bottom of a trading range, and most trading range breakouts fail, and also second leg traps are common. And therefore, most of the bears who sold are going to be buying back some or all of their shorts down here. 2 legs down, 1 pullback 2. 40, it's similar to 23 and 11. A bear breakout followed by a bull bar. And this time it's 2 legs down, so it's a reasonable buy. But I suspect that we're just going to go sideways here. We're starting to get a lot of small bars here, a couple small bars here, so it looks like it's going to get very quiet. And then we have another lower high, 51, second entry short. I did not take it because I thought 46 was strong enough so that this might be an ABC pullback, ABC, for a second leg up, but then not much of a second leg up. Another sell for the lower high, major trend reversal, 58, 61, I thought was a higher probability sell. But where are the big bear bars? The bear bars are not all that big, not consecutive big bear bars, plus bull bars and doji bars. So it does not look like the start of a bear trend. It looks like a bear leg in a big trading range, and therefore a lot of the bears ended up scalping out. Buying above 71, a very tight bear channel and a bear bar, so not a good buy. Selling below 73, double top 67, below the moving average, I would not. We're right above the bottom of a small range day, and if the range is small after 5 or 6 hours, it's probably going to stay small, and therefore selling below 73 is probably not going to lead to much of a move down. And then buying above 74, second entry buy, double bottom with 9, probably going up to the open of the day. Selling below 76, it's a micro double top, selling below 77, micro double top, up 76, down 77, up 77, and then down 78. 4 consecutive bull bars. I'm not going to take that sell. And then buying above 79 for the failed breakout. I was talking and I did not take the buy. And look where we closed the day, within a tick of the open. And I've been saying that right from early on, that today would probably close right near the open. Buy the close, sell the close. The first sell the close that traders would consider was 6 or 7, but disappointed 11. I think they get out above 11. And is it buy the close 13? Well, we got 3 shrinking bull bars, and at that point I still thought we would get a second leg down, so I did not think it became buy the close until 14. Not great followed through 15, so it looks like a trading range. And then none of this is good, buy the close, sell the close, none of it for the rest of the day. Limit orders, nobody's going to sell above 1, nobody's going to buy below 2, nobody's going to buy below 4, second entry short. First limit order trade was all the way up there at 18, but nobody's, well, I'm just going to say nobody's going to buy below 18. That's not true. They might buy for a test up to yesterday's high. And then here, it's really interesting how really is not much limit order trading. Some traders sold the 4 high, and then traders bought below bars, below 22, and then below 38, and below 70, below 74, and sold above, above 26, above 47. But that was pretty much it. You could sell above 51, you could sell above 55, sell above 59, but I'd rather wait and take the stop entry short. So very quiet day. It looks to me like a bull flag, and it looks like on the 60-minute chart we have a bull flag. We have a bunch of dojis, like whatever that is, 8 dojis. So tight trading range, not strongly bullish. The bulls want to get above this major lower high. That's a strong breakout to a new low. We held above this low, so this is not, it's possible that a lot of the traders are saying, well, this low is not the bottom of the range. This is more important than that. This is more major than that, and therefore it's okay to go below this as long as it doesn't also go below that. Big enough reversal, going sideways, likely to go at least a little bit more up and test this high. I have not changed my puts or my put spreads. I still think the odds are we're going to correct down about 5% sometime in the next couple of months. But if I'm wrong, that's life. You never right 100% of the time. Good question. What is the likelihood that this move down to the daily moving average is all we get before the market rallies to 2,700? Is it 10%? Is it 20%? Okay, so he's saying we have a 20 gap bar buy on the daily chart. We have not been down to the daily moving average in probably 40 bars since over here, and therefore the bulls have been willing and eager to buy above an average price. They're finally getting an opportunity to buy at the average price, and they took it yesterday, and we rallied up. So he's saying, what's the chance that we're coming down here before we go up to 2,700? So it's about an equidistant move. So what's the chance? So he's saying this. Okay, I'm saying we're coming down here, and everybody on the TV is starting to talk about 2,700. What's the chance that we get there before we get here? What's the chance we get here before we get there? I think it's probably, 70% chance that we get here before we get there. But, if we start going up like this again, I'll quickly change my mind. But right now, I think it's 70% chance that we'll get here, which is closer than 2,700. I think 70% chance we'll get down here before we get up to 2,700, mainly because the daily, weekly, and monthly charts have historical buy climaxes, and they're unlikely to continue much longer. Okay, on the Globex chart, are we always in short now? Let me take a look at the 5-minute Globex chart. 5-minute Globex chart is the same as the day session chart. Let me take a look at a higher time frame chart. Oh, you might be talking about the daily chart. Let me look at the daily chart. Okay, this is the day session. This is the day session chart. and we're still always in long. Here's the Globex chart. I think we're still always in long. Very tight bull channel. Stop entry short without a clear double top. Unlikely to make it always in short. And the bears do not have 2 or 3 big bear bars closing on their lows. So I think we're still always in long on the daily chart as well. Globex and in the day session. Can you go over some of the trades that you took today? You know, at the end of the day, you know, I always think that I took one number of trades, and I usually end up having taken about twice as many. But anyway, I sold below, so I'm going to tell you the ones I think I took, or the stop entry ones that I think I took. I sold below 4. I sold below 21. I debated buying above 30, did not buy. And in here, I took a limit order buy below something. We're going to buy it. I bought around the 53 close. Excuse me. Sorry about that. Now, other trades, sold below 60. I bought above 74. And those are the stop entry trades that I remember. In terms of reasonable trades for a beginner, selling below 4 made sense. We have a second-legged, second entry failed breakout, and what's likely to end up as a trading range. Selling below 21 made sense. Selling below 34 made sense. Selling below 61 made sense. And buying above 74 was good, reasonable. Buying above 79, as I said, if I were not talking, I probably would have bought above 79. And buying above 11, when I'm just getting out of shorts, it's really hard for me to get long. And therefore, you know, I would not take the 11 buy. Also, I wanted at least a micro double bottom, and we did not get it. But so there were a number of okay scalps today. Some were swings. You know, this I think was a swing, but most traders exited at 4 points. This was a swing, but most traders ended up getting out above 23. And this was a swing. Most traders get out either above 40 or 43. And this was a swing. And, you know, I think a lot of traders get out above 71, even though it's a bear bar. It's a high 2, and it's a double bottom with any of these lows. And if they did not get out there, then they get out above 74. Okay, so to me it looks like we're going higher near term, you know, next few days. Also, I talked before, years ago I used to do tests. I had a buddy who loved thinking about calendar trades. Let me just say something about that. Let's say you take a deck of cards and you throw it up in the air, and half of them come up red, half of them come up black. And then you take the red ones and you throw it up in the air, and half of them come up, let me rephrase that. Let me do it differently. You take a deck of cards, throw it up in the air, half come up face up, half come up face down. You take the face up cards and you throw it up in the air, half come up face up, half come up face down. You take the face up cards and you keep doing it until you finally have only one card coming face up. Let's say it's the 4 of hearts. Do you conclude that whenever you throw a deck of cards up in the air, the 4 of hearts is always going to turn face up? Because here you threw a deck of cards up in the air. 4 of hearts was one of the ones that turned face up. You took that group and threw it up in the air. 4 of hearts was one that came face up. In fact, you may have done it 6 or 7 times, and every time the 4 of hearts came face up. So let's say I take a deck of cards again and throw it up in the air. Are you going to bet that the 4 of hearts is going to be face up? Do you think it's 90% probability? No, it's a 50% probability. You know, half the cards will be face up, half the cards will be face down. And if you keep doing it with the remaining half, eventually you get one card, but that has nothing to do with predictive value. I say that because my buddy, who 20 years ago, I don't even remember how long ago, he was doing all kinds of tests. Every day he was testing the past 10 years, the past 20 years, how often is today going to have a higher close than yesterday? And you're going to find all kinds of streaks, that today, over the past 10 years, 7 times was higher than yesterday's close, or, 9 times was lower than yesterday's close. That does not mean predictive value. That's the deck of card thing. To place money betting that there's actually something other than randomness is foolish, because it is random. However, there are some seasonal tendencies that are not random. For example, the end of the quarter typically goes up. The end of March especially typically goes up. Before holidays, 4th of July, Christmas typically goes up. End of October typically goes up. So there are some real seasonal tendencies, and then some that are purely random. And if you test them often enough, you discover that they no longer work. One of the seasonal tendencies that I came across was that the end of October 5th to November 6th, is seasonally bullish. That means that the November 5th close has had a very high probability of being above the October 26th close. That is not saying all that much, because October typically rallies in the second half of the month. And you say, wait a minute, Al, what about the crash in 1929? And what about the crash in 1987? Those are both in October. Yes, I agree with that. But what happened after the crash? Both times the market rallied later in the month. And so while October has had some pretty famous sell-offs somewhere in the middle of the month, even when it's had those sell-offs, by the end of the month, it's been up. So, October, even when there is a crash, tends to be up at the end of the month. And I don't know why that is. I don't know if it's, I don't know if funds do their bonuses based upon October. I know years ago, a lot of the funds did their year-end bonuses based upon the October close. And so I don't know if that made a lot of fund managers, try to buy stuff right at the end of going into the end of the year, hoping that their portfolio would look better, or hoping they'd get some little bounce, or knowing that all the other fund managers would be buying and therefore the market's going to go up. I don't know. All I know is that seasonally, historically, some little windows, like the end of June to July 5th, and then end of October to November 5th, they have a good record of being bullish. But I'm not going to be placing any trades on that. I look at it more as entertainment. Oh, look at this year, it went up, or look, this year, it did not go up, it went down. So I will look at it, and I'll probably forget it a week later. So, and I'm sure I've looked at it every year for the past 20 years, and I've not kept a record of it. So I don't know if it's still, I don't know if it was ever valid, but I don't know if it's still happening. And I'm not interested enough to test it again, because I'm never going to place a trade on that basis. And would I ever consider it as one of 5 factors for placing a trade? No. So I never, I'm a day trader, and I don't have enough faith in those calendar tendencies to ever consider them in making trading decisions. Okay. Tomorrow, really interesting, a Friday, and the bulls are trying to get outside up. And as I'm going to say something that may sound stupid, but I'm going to say it anyway. There's a chance that tomorrow could be a crazy, crazy day, and we could have a huge bear day closing below last week's low. Here's last week's low, right? Even though it does not look likely after this. And there's also a chance that we can have a crazy bull day, getting all the way up to a new all-time high. So even though today is very quiet, we're historically overbought on the daily, weekly, and monthly charts, likely to reverse. And whenever something is likely, you do not conclude the opposite is unlikely. Instead, conclude the opposite is more likely than it should be. So whenever you're likely to get a sell-off, the chance of a big surprise rally is greater as well. You know, you're betting on increase in volatility, and it's in both directions. So while, you know, the market is extremely overbought, and I believe likely to pull back or correct 5% or so, there's also an increased risk to the bears, increased probability that we'll get a very big blow-off rally instead. Okay, hope everybody has a good night.